Hi, this is Daniela Cambone, and welcome to StansberryInvestor.com and to our summer series. It might not be June 21st yet, but we thought, why not kick off things a little sooner here? We have incredible lineup of guests and content coming your way. I'm very excited to share it with you. But first, I wanted to bring on Will Rhind. He is the CEO of GraniteShares to get his thoughts on a major news item this Monday here. Former Fed Chair, Treasury Secretary Janet Yellen coming out saying that higher interest rates may be in our near future. So we want to get his thoughts on this. Will, good to see you. Welcome to StansberryInvestor.com.
Yeah, thank you so much, Daniela. Thank you for having me back again.
So, well, like I said, Treasury Secretary coming out earlier today with this quote, and I'm going to read it. If we ended up with a slightly higher interest rate environment, it would actually be a plus for society's point of view and the Fed's point of view. So a few things here to unpack. There's the inflation angle, there's higher interest rates. But first, well, what do you think about her thoughts here? Would higher interest rates be a positive for the financial landscape here?
Well, I think that, specifically to the comment, I think she used the word slightly higher interest rate environment. So to me, I think that's probably accurate, meaning that I think that the economy can handle slightly higher interest rates, but I'm not sure about materially higher interest rates. And I think that's the key difference here, that as we've seen, interest rates in the bond market have crept up, over the past 6 months, but it gets to a level where it starts to harm or it starts to impact the stock market. And that's something that they don't want. And that's something that investors don't want either. So I think that there's room for some interest rate rises, but not much higher than where we are.
And Will, she was saying that the 400 billion that would be coming into the system each year wouldn't lead to runaway inflation. Do you agree with that statement?
Well, I think that it is difficult to say, right? Because we don't know what actual impact that will have. I think that it's not just the spending package or the stimulus package alone. I think we already are getting inflation, and that's already happening. And I think that what this could potentially do is just add fuel to that fire. So in the sense that this particular stimulus bill will not be the root cause, if it's right to say that, then I would agree. But I think the fact is inflation is already happening, and this will just add further fuel to that fire.
And well, let's talk about if we will, hear more of a hawkish tone coming from the Fed and higher interest rates. Normally you've come on and I've got your thoughts on the precious metals. And we know from tradition, gold doesn't tend to perform well in a higher interest rate environment. What does this mean for the yellow metals future?
Yeah, I think that we've got to be careful when we talk about that, because when we say gold doesn't perform well in a higher interest rate environment, I think we've got to make the distinction between nominal interest rates and real interest rates. And of course, the distinction being that real interest rates capture inflation as well. So if you look at nominal interest rates and say the 10-year, currently we're around 1.6%, something like that. But if you factor in inflation, and let's say you take the official inflation numbers, which as you know, are now about 3% annualized, but potentially are higher than that, then we're firmly in negative real interest rate territory. And that's positive for gold, because that means that a zero interest rate, bearing asset like gold, the opportunity cost of holding gold in this environment is very, very low. So when we say increasing interest rates, we've always got to remember that it really only makes a difference if we're talking about positive real interest rates. So that's after inflation. And I don't think we're going to see positive real interest rates for some time.
Right, because with the economy reopening, the question is this the time to really change course here?
Yeah, and I think probably the best guess on that I've heard so far is that I think that the tapering in terms of the actual stimulus, the bond buying, the purchase program the Fed's been implementing, I think that may well start to wind down towards the end of the year. But as to actual real rises of interest rates, I'm not sure we're going to see that this year.
Well, thank you so much for joining us here on StansberryInvestor.com.
Always a pleasure. Thank you so much for having me.
And thank you all for watching. We'll have much more for you, so be sure to stay tuned to StansberryInvestor.com and share us in the meantime where you watch us. That's it for me. I'm Daniela Cambone.